Good morning, everybody. How are we doing? My name is Jason Krutzky. I hope you guys are all doing good. It's Monday. We had a beautiful weekend. I hope you guys had a great weekend too. It's Halloween. Happy Halloween. Are you guys going trick-or-treating today? I don't know if you are or not, or taking your kids trick-or-treating or something like this. I hope you guys are doing good regardless. And yeah, we're here today. You know, usually when we do these, actually, before we get started, I'm going to give you guys just a moment to file in here. Jamel's not going trick-or-treating. He says, nah. I just want to give a minute for you guys to come in here because I don't want to get started before everybody's here. So please say hello. If you're here, say hello. Let me know you're here. I would love to say hello back to you guys. You know, usually when we do these lives, we're covering something crazy that's going on in the market. Maybe it's Tesla earnings, or maybe it's Jerome Powell is talking about interest rate hikes, or whatever it is. You know, usually we're covering something that's causing volatility in the market. Today, we're trying something a little bit different. We are going to buck the trend of what we usually do, and we're going to focus this entire hour-ish on one of the tools on the platform. Now, if you are a TrendSpider user, GM from New Orleans, GM back at you, Jamel from Boulder, Colorado. If you're a TrendSpider user, you are likely already aware of the sheer amount of power that the platform has. You know, from its automated analysis tools, the auto fib drawing, the auto trend drawing, auto candlestick pattern recognition, the new chart pattern recognition. I don't know if you guys have played around with the new chart pattern recognition tool. It's automatically able to discover ascending, descending triangles. We're going to be adding to that functionality really dramatically here over the coming weeks and months so that you guys can automatically scan for chart patterns. Crazy. You guys know we offer various types of alerts, dynamic alerts, multi-factor alerts. You can put alerts on all of your indicators. You can create multi-factored alerts for price conditions, indicator conditions, candlestick pattern conditions, up to 4 different timeframes per alert. You could do all kinds of crazy things with the alerts. We offer, you know, no code market scanner, unusual options data, smart checklists, seasonality, analyst estimates, FRED data, Federal Reserve economic data, unique indicators like the TW pivot, Trading Wars golden indicator, Caruso's market breadth, net highs and lows. The list kind of goes on. And all of these tools are there. They exist to help us make trading decisions, right? They help us understand when to buy and when to sell. But what they don't do, or what the other side of the coin is, that's kind of equally important, is the question of what happens once I get into a position, right? And this is kind of the key question to ask. Are you analyzing the data after you take the trade? I know that I'm personally, I can get stuck on, like, if a particular strategy performs well for me once or twice, I all of a sudden think, hey, that's a really great strategy. It's easy to get into that mindset. And the reality is that that's not always the case, right? Some strategies perform really well under certain circumstances. Other strategies perform really well under other circumstances. Some strategies never really perform all that well, and some tend to outperform a lot of the time. So on the TrendSpider platform, the tool that we have that seeks to answer these questions for us is the strategy tester. The strategy tester is super, super powerful, but it is quite complex. There's just simply a lot going on with it. There's a ton of different data points to decipher. And what I want to do today is I want to spend this full hour that I have with you guys talking about the strategy tester. This will be great for anybody who's new to the platform, who's just starting to play around with it. And it'll also be great for anybody who has been around for a little while but hasn't really brought it into their process. You know, it's an easy step to kind of miss in my experience, it's an easy step to kind of miss because I don't know, it just kind of is. You get stuck in your processes, in your styles of trades, and you kind of forget about the idea of like, oh yeah, I should probably test and see how this strategy actually does over a period of time. So today we're going to take the next hour. We're going to dive deep into TrendSpider Strategy Tester functionality. I'm going to explain what each data point means or what each data point measures so that you can feel confident in using the tool and understanding the results yourself. Hopefully this will be an opportunity, or this video will have some use in the long term. You know, you guys will have this up and available for the future, so you guys can watch it and come back and reference it if you need to. So let's get started. I'm on the ES chart here, and I'm just going to use ES. You know, we recently added live futures to the platform. Our good friends at CME Group were so kind as to help us do that. And I've been almost solely focused on futures trading myself personally. So here we are. I was doing some testing on some things earlier, and I just wanted to kind of focus on ES. So first things first, getting the strategy tester up on your screen. Super simple. Up here, the strategy tester button, click this. Now keep in mind, if you're a TrendSpider user, you know that there are three different tiers that you can sign up for. The lowest tier does not offer access to the strategy tester. So if you want access to the strategy tester and you are not yet a TrendSpider user, you will have to upgrade your account to one of the top two tiers. And now would be a great time to do that. We've got a Halloween sale going on, and it's a killer deal. I would take advantage of it if I were you, if you have not yet. So we've got the strategy tester up, and it appears at the bottom of our screen here. Now, there's a lot going on, so let's kind of talk through just kind of the basics of what we see. On the far left-hand side here on the strategy tester, we have it's a pretty short list of shared strategies. Now, we're not necessarily suggesting that these shared strategies are going to work on every name or that they're going to work on any names. It's just to give you an idea of how to think about crafting these on your own. You can also now save all of your strategies. So if you create something that you like, that you find performs well, you can save it so that you don't have to go in and input all that criteria later on down the road. So you'll see my list probably has quite a few things that your list might not have. That's simply because I've saved a bunch of stuff over the time. Right here, we have entry conditions. This is exactly what it sounds like. This is our entry conditions. This is why we're getting into a trade. What's up, the African Wolf? Happy Monday to you too. This is why we're getting into a trade. And if you're familiar with the scanner, if you're familiar with the multi-factor alerts, this is all going to look really familiar to you. You can preload scripts, or you can load pre-written scripts using the script actions button, just like you would in the multi-factor alerts or in the scanner via that load from template button. Now, do keep in mind, our scanner allows you to scan for conditions occurring on up to 4 time frames at once. The same is true for our multi-factor alerts. You can utilize up to 4 time frames per scan or per alert if you'd like to. You don't have to, but you can. Now on the strategy tester, you are limited to a single time frame, so you can't have daily conditions and hourly conditions in the same backtest. Keep that in mind. If you load in a pre-saved script that has multiple time frames within its conditions, you will be limited and you will have to pick a single time frame for those conditions. So that's kind of the rules behind the loading from the template. And then we have this add parameter here button. Again, just like you're used to in the scanner and the multi-factor alerts, you can choose conditions, price conditions, indicator conditions, candlestick pattern conditions. And you can give all those conditions, or you can utilize really kind of as many conditions as you need. You can utilize different condition groups if you want to define different sets of conditions different ways. You can say all of this is true and none of this is true and any of this is true and so on. On the right-hand side, exit conditions, quite a bit more here to sink our teeth into. You can add a script similar to like what you've done on your entry side. You can add a script. So click that. That's going to bring up the edit box here, and you can add your parameters, whatever you want. Price, indicator, candlestick pattern. You can also, so on your exit side, you can have multiple exit conditions if you'd like. You have the option to exit whenever your entry is invalidated. And that just simply says that none of the entry conditions are true anymore. If one of your entry conditions is that price is above a particular moving average and price falls below that particular moving average, it's going to get you out, right? It's none of your entry conditions are true anymore. Next, a number of candles have passed. This is a time-based exit condition. So input whatever you want. It's up to you. There are no rules here. But if you want to get out of the trade after 5 candles or 10 candles or 20 candles or whatever it is, this is your way to do that. And then we have take profit, stop loss, and trailing stop. And I'm going to show you all 3 of these together because they kind of all work the same way. These are all based off of percentage values, right? So we can input a percentage value here. These are just the presets. We can change these and make them whatever we want. And then we have this after candle closes button. And the after candle closes button is something that we're going to see more than once here in the strategy tester. It's important to understand what it means. Essentially, what it means is exactly what it sounds like. It means you're going to exit the trade after the candle that your exit conditions occurs on closes, right? Well, in the case of a take profit or a stop loss or a trailing stop, those percentage values may get hit before the candle closes. You've seen it a million times before. Price extends and gains a bunch, and then it gives some of that back, and then the candle closes. It looks like a giant wick to the upside or to the downside. In the case that you want to take profit on a percentage stop, or you want to stop loss, you want to stop out at a percentage, it makes a lot of sense to not have to wait for the candle to close, right? If you wait for the candle to close, then there's the potential that it may not close at your stop, right? It could gain, let's say your take profit is 5%, and let's say in an hourly candle, it gains 7%, maybe in the first 30 minutes of that hourly candle, and then it pulls back and closes with a gain of 2.5. Well, if you have this after candle close checked, you're going to still be in that trade, even though technically during that hourly candle, you hit your 5% take profit threshold. If you only want to get out of that trade, or if you just want to get out of the trade the second that that percentage value is hit, then you're going to want to make sure that the after candle closes button is not checked, right? We're going to see this again here shortly. Just want to make sure you guys understand that. And again, like I said, you can have multiple exit options. You can have a script with a take profit and a stop, or with a trail stop and a take profit, or something like that. You can kind of mix and match your exit criteria to whatever you need. Now at the top here, there's always a funny title. This is pretty customary of TrendSpider. We have a funny title there. As a preset, you can make the title of your strategy whatever you want. You could choose the candlestick style for your strategy. Of course, different strategies are going to perform differently depending on the candle style. I pretty much always use just standard open, high, low, close. You can choose your time frame. Again, like I said before, time frames are limited to a single time frame. So adjusting the time frame here is going to adjust the time frame across all of your entry and exit criteria. You have extended hours data. Of course, ES does not really have extended hours. If I were to go to something like SPY or the Qs, this button would become available for me to use. Data chart. This is how far back the back test is looking. How far back are we testing? Data chart is the shortest back test. It's usually about 300 candles. And then you can choose to test further and further back in 1,000 candle intervals up to 10,000 candles on any time frame. There isn't a right or a wrong here. Use whatever you want to use. Personally, I like big data sets because I want to see a strategy that's going to work over a long period of time. Kind of like I prefaced at the beginning, just because a strategy is working right now in the current market conditions, those conditions could change on a dime, and then all of a sudden the strategy that I was using before is no longer working. So I want to test back as far as I can because I want to include as many market conditions as possible. right? So we could choose 10,000 candles, 7,000 candles, whatever you want to choose, up to you. Trade by next. Now, I said that the after candle closes was going to come into play again. And this is really where it comes into play again, is the trade by next functionality. So what does trade by next mean? It simply means that in order to get into a trade, our entry criteria has to be true. In order for our entry criteria to be true, the candles have to close with that entry criteria to be true, right? Or being true. Once the candle closes, we can't take a trade on it because it's closed. So we have to wait for the next candle to take the trade. We're taking the trade on the candle that occurs after the candle on which all of our entry conditions are true on, right? So that's what trade by next means. And we can choose where on that next candle we want to take the trade. Do we want to buy the open of the next candle? That would obviously be the fastest entry into a trade, would be buying the open of the next candle. It's the fastest we can get into a trade. We could also, if we wanted to, we could buy the high of the next candle, the low, the close. And these values are all possible simply because we're backtesting, right? They all exist already. Now, why does it make sense to buy the high or the low? I would argue that it doesn't make a ton of sense, but we wanted to offer that as an option. You can also buy the close. Some folks prefer to buy on the close than the open, so you could do that. And then we have these 4 options here: HL2, OC2, HLC3, OHLC4. These are averages of the next candle. So HL2 would be the high of the next candle plus the low of the next candle divided by 2. OHLC4, open plus high plus low plus close divided by 4. Now, why does it make sense to want to utilize one of these options? Well, for me personally, it actually makes, I think, a ton of sense. Why does it make a ton of sense? Well, because I don't fully automate my trades. I take trades manually. And because I take trades manually, oh no, chat got disconnected. Why did chat get disconnected? It's trying to reconnect. I take trades manually. And because I take trades manually, I don't always catch them when the market opens or when the candle opens. I don't always catch them when the candle closes. I don't always catch the short at the high. I don't always catch the long at the low, right? Like it's different every time. Oh no, my chat is disconnected. I'll have to, hopefully we can get that worked out. Sadie, if you're watching, if there's any way that you could help me with that, that would be awesome. If not, totally cool. But yes, because I trade manually, it makes a lot of sense that over a multitude of trades, over 10 or 15 or 20 or 50, whatever trades, I'm going to probably get into those positions at slightly different times every time. Sometimes I may catch that perfect high short or that perfect low long, or maybe I'll buy the open as soon as those conditions are true, or maybe I'll buy the close. You know, I'm going to be buying kind of throughout the intra time frame of whatever that candle is because I'm trading manually. That opens me up for, you know, that opens me up for the reality of I'm not buying the open every time. That value isn't realistic for me. I'm not buying the close every time. I'm definitely not selling the high every time, and I'm definitely not buying the low every time. So for me, personally, what makes sense is an average. OHLC4 is kind of the most all-inclusive average, right? It takes all four data points, open, high, low, close, adds them up, divides by 4, and gives you an average. And over time, I think, especially as you get into more and more trades, that makes more and more sense. Again, do what works best for you. Whether or not you guys know it, you pretty much can automate all of this stuff into your trading life via a new product that we have called Signal Stack. So we could, in theory, I could take these ideas and these strategies and I can automate them, and that would be just fine. And maybe I'll do that eventually, or maybe I'll do that very soon. I don't know. But for now, because I'm a manual trader, trading when I'm getting alerts and when things are meeting criteria that I'm interested in, I'm getting in at different times. And so it makes sense for me to kind of use that average. But again, use whatever data set makes sense for you. Then you have long only, short only. Of course, this is a directional tool. You cannot say if this then long, if that then short, and run them at the same time together. You can run two separate tests, but you cannot run them both together. So you do have to pick a direction. And then of course the run button, this is going to run the test on whatever ticker it is that you're looking at. And that's really kind of the gist of it, the save button over here. That allows you to save your strategies. So now that we kind of understand the basics of the layout of the tool and where everything is, let's talk about a strategy. Now I could build a strategy here, but we are kind of limited on time. So I want to go ahead and just utilize a strategy that I already have pre-made, this Rev Candle Strat here. So I'm going to grab it, say yes. It's going to load the strat in, and we can talk very briefly about the strategy itself before we get into the test. Now, it's a very simple strategy, nothing crazy about it. There are 2 all of the following conditions and 3 any of the following conditions, which means these 2 conditions here have to be true, and any of these can be true. So what we're saying is RVol is greater than 2. Not going to dig in too much on RVol, but if you are not familiar with RVol, it is a relative volume value. It's saying it's comparing current volume to the average volume. So an RVol value greater than 2 is just saying 2 times average volume on the 5-minute candle, and it's saying that price closed below the VWAP intraday on the 5-minute candle. And then we're also defining that there is a rev candle, a reversal candle, either a hammer, an engulfing bullish, or a doji. So these would be more bullish reversal candles. So we're saying a bullish reversal candle on double the average volume and below VWAP. So there's an old adage, you don't short below VWAP, you don't go long above. I don't know if that's necessarily always true or should be followed, but there is some theory around that. So the theory here is we are buying when there's above average volume on a reversal candle and prices below the VWAP, kind of expecting price to gain back at least to the VWAP. We're not playing it that exact way, but that's kind of where our heads are at. On the exit side, it's pretty much just the reverse. We're saying RVol greater than 2. So again, we're looking for that above average volume. But in this case, we're looking for an inverted version of that reversal candle. So an inverted hammer, an engulfing bearish, or a doji. So price hopefully is getting a push on volume, and then price is selling on volume as well and reversing, and we're getting out. It's pretty basic, pretty simple theory behind this strategy, but we're going to find here kind of how it performs. So we've got the 5-minute time frame selected. We're looking back 10,000 candles. We're trading on the next open in this case, and we're going long in this case. And I'm going to say run, and it's going to run the strategy. Now, we pretty much immediately get data back. And the first thing that we notice, I'm going to kind of zoom out on the chart here. We can see our entries and exits painted on the chart automatically for us. This is really helpful because we know where we got in, right? Our entries are always going to be written in white with a little arrow pointing to them. Our exits are always going to be written in either red or green, depending on whether it was a winning or a losing trade. So most recently when this happened right here, it ended up being a losing trade to the tune of not much, negative 0.06%, not so bad. And we could pull back on the chart and load up some additional data here. We can see an entry here, another exit for a loss. We've got another one here. Here's 2 winning trades in a row. Zoom out a little bit. So here's your entry. This one was a really monster trade. This is really what we're seeking to find, right? We're looking for these really kind of runner type of opportunities where a ton of bullish momentum comes in and price is just able to kind of gain. So we have this big move, we gain 2.96% and we get out. And then we have another entry here for a gain of 1.18%. Pretty good so far, right? We're seeing what we kind of want to see, kind of what we're hoping to accomplish. We're trying to buy a little bit of fear and then, or buy kind of when something fundamental kind of changes, right? We see this kind of tick in volume. We see this reversal candlestick pattern. Now, down here in the strategy tester, there are kind of 3 different panels that we want to really familiarize ourselves with. We have the price behavior explorer, we have the performance chart versus the asset performance, and then the chart that lies underneath it, and then we have tabular data. So I'm going to go through these kind of one by one and talk through each of them. Now, each of them has A couple of items to be mindful of. They all have, both of the charts have these crosshairs. Crosshairs are going to allow us to expand the chart into a full screen view. They also are these little question mark buttons. Question mark buttons will take you to a blog post about that tool. So feel free to follow along with me here, but also know that all of this stuff is kind of written out in our blog, so you can always reference it if you need to. So I'm going to click on the crosshair. Down at the bottom, of course, we see a chart, and I want to get into what all of this stuff on the chart means, but we see these kind of buttons down here, these words down at the bottom of the chart, and we can turn these on and off. And we ultimately, when we have them all turned on, we get a chart that looks like this. And this might be a little confusing, so I want to take this step by step and do kind of one thing at a time. Now, the first thing that we're going to note is the chart itself. How is the chart measuring? What is it measuring? We can see here on the, I believe this is the x-axis. In the x-axis, the flat one? I think it is. The horizontal axis. On the horizontal axis is time in candle terms. So 3 candles, 6, 9, and so on, all the way to the longest that a position was, that we stayed in a position. So depending on what your exit criteria is, if your exit criteria is exit after 10 candles, or if that's one of your exit criteria, this axis of your chart will never go more than 10 candles, right? Because you're defining, I want to get out of this trade after 10 candles. I don't have that restriction, so it's just staying in the trade, or it's showing me on the chart the longest period of time that I was in a trade for. And in this particular case, it was like 200 and something candles. On the right hand side, this is percentage change. This is how my strategy performs, right? The zero line is a 0% return. Anything above the zero line is positive return. Anything below the zero line is negative return. So over time, how the strategy performs. Now we have min-max change here. I want to go through these one at a time. Min-max change. This is kind of literally what that sounds like. It is the minimum and the maximum change of the performance of the strategy over time. And we can kind of see pretty clearly it tends to perform better, right? It tends to be more positive than negative. At the highest point, my strategy in individual position terms had a gain of 5.32%. At the lowest point in individual position terms, it had a loss of 2.23. So that was a max gain of 5.3, max loss of 2.2. And over time, you can see that essentially we're, around that 160, 170 candle mark is the sweet spot for this particular strategy. So the longer you stay in this strategy up to about 170 candles, the better the strategy performs. And then we see a really steep drop off after about 200 candles. And then the strategy just kind of piddles around. And it tends to have a pretty even win-loss percentage, right? So initially, it's relatively even, and then after about 36 candles, it tends to outperform all the way through about 200 candles. Then after about 200 candles of being in the position, the strategy tends to underperform relative to the rest of the performance, right? 25th to 75th percentile. Now, this is a little bit more accurate of a read in the sense that it's giving us on average how the strategy performs, right? So the outliers are going to be the min-max change. And then for the most part of those 19 positions that we took, we could see we took 19 positions over the last month. These entry exit criteria have occurred 19 times. For the most part, our 19 positions tend to have a pretty tight win percentage or loss percentage. A loss percentage does it tends to bias a losing trade as time goes on, the farther we get in, but we do see that spike again around that 170, 180, well, actually 190 candles area. You've got number of positions. So this is how long the positions stay in it, how long we stay in a position. So there's one trade that we're out of the position within just a couple of candles, meaning we got some really big reversal candle to the upside, and then we got some big reversal candle to the downside. So there was just big volatility on one of the positions. It went up on volume, and then it went down, or reversal candle up on volume, reversal candle down on volume, like one after the other. And then we could see kind of as time goes on, the amount of positions that stay in a position for that amount of time decreases. Here we're at 132 candles, and we've only got 10 positions that made it that far. We've only got 5 positions that made it to the 220 candle mark. So we were looking at that 190 candle or 190 as the kind of area where our win rate drops off. Well, here we can see very clearly only 6 of our 19 positions actually even made it to that point. So that's kind of interesting to note, right? The next piece is the random control mean. This is a random control is taking random data points from the actual price action. Because it's a mean, it's taking them together, dividing them by the total number, and giving us a mean value. And ultimately what we're looking for with the random control mean is specifically how our mean percentage change compares. And what our goal here is with our mean percentage change is we want to see outperformance to the random control mean, because the random control mean is, like I said, it's just data points from price action. Mean change, mean percentage change, is our strategy. So what are we looking for at the end of the day when it comes to a strategy? The whole point of having the strategy tester and using it is to create strategies that outperform the random control mean, right? Or outperform the buy and hold, outperform the asset that we're trading. If our strategy tends to go up when the asset goes up, and it tends to go down when the asset goes down, how powerful is our strategy really? It's not super powerful, right? Because we want to know how those two values compare, and we can kind of see it here. It goes up with the asset. It goes down with the asset. It kind of hovers a little bit. Then we get a big down move in our strategy as the asset goes up. And then kind of at the end here, we're able to outperform. So the strategy really starts kind of doing great, kind of quite later in time. And though this is appealing, though this is interesting, though this beats the buy and hold, we're going to find that there are fundamental flaws in this. We're going to talk about that in a little bit. And then, of course, we have median change. This is the median percentage change. So median, of course, is taking all the values, finding the middle one, and plotting that, right? It's not an average. So this is how this Price Behavior Explorer kind of works. This is what it's showing us, and this is how you can kind of be thinking about using it when you're creating your own strategies. And again, kind of in my opinion, what I like to look for, and again, it's just me, and I'm just one guy, everybody has different things, but what I like to look for is I like to look for a strategy that manages to buck the trend of whatever the asset is that it's trading. If it's going down when the asset's going down and going up when the asset's going up, that's not quite exactly what I want to see. And I'll show you a great example of what I want to see towards the end. The next piece here is the performance chart. Now, this is maybe the first data point that folks are going to be looking at and noticing. I'm really sorry. I want to say real quick, I'm not sure how to reattach the chat. I don't know if anybody has any questions, but for whatever reason, chat is disconnected, and I can't seem to get it to work. They're gonna try. I guess it says it's gonna try and reconnect. If I'm unable to get chat to work, if anybody has any questions about any of this stuff, do feel free to hit me up. My Twitter handle is right there, at Krutzky Trades. And then also down in the bottom right-hand corner of your chart where it says contact us right here, this is a direct feed into our employee chat room. We have live employees in chat Monday through Sunday, about 20 hours per day, Monday through Friday, and about 8 hours per day on the weekends. They are there to answer your questions, you guys. So please do not hesitate to reach out to us if you have questions about anything. We are happy to assist with all and any of your questions. We're here to help. So anyway, getting back to this performance chart. The first value that most people look at when they utilize the strategy tester is this performance value number. They want to know is the strategy beating the buy and hold? It's kind of what we're all about here, right? We're trying to find something that's going to beat the buy and hold. And we can see very clearly this one does. So our strategy over the past month of data, 19 positions taken for a gain, a net profit of 4.13%. Over that same period of time, ES has gained 0.25%. So the strategy beats the asset to the tune of about 3.85%. Not bad over just a month, and really kind of it's a very simple strategy for one. It's easy to follow, and only 19 positions too. So you're not trading wildly in and out. You're just kind of trading on these big pushes in volume on these reversal candles. We like this. Let's dig into this chart now. Again, you have a crosshairs here. We're going to open up the crosshairs. And again, just like the previous chart, there are some values that you can click on and off. So I want to start with, let's start with the asset here. So this is the asset, right? You have the red line up here. This is the 0 line, asset in profit or asset not in profit, from the time of the start of the test. So we can see this test started September 20th until now, and initially had a pop, and we've just been failing below where we started up until maybe this was Friday. Yeah, Friday looks like, or maybe it was yeah, I guess it was Friday. We kind of gained those September 28th highs, or kind of where we entered, and now finally the strategy is slightly in profit, or not the strategy is in profit, the asset, the underlying, is in profit from where the strategy started. So it's good to see that. We could see then positions, turn on positions, and we could see every time that we took a trade. It's kind of interesting, right? Initially, we took this trade on this volume pop. This was a Fed date, if I remember correctly. I believe there was a Fed announcement on this particular date. Our first trade was a big loser. Our second trade was a bit of a loser as well. Our third trade was a loser. Our fourth trade was a winner. Not a very big winner, but a little bit of a winner. And then we had multiple losers. So it took a while to really kind of catch our momentum. And what else do we see very clearly here? Well, this strategy works a lot freaking better when price is trending higher than when price is trending lower. We ended up catching the move just before this volatile move, but the big piece here that we caught was this low. We managed to kind of nail this low. We rode it up all the way almost to the high. And then we caught the secondary low too. We didn't ride it all the way back, but we caught a little bit of a move here, and then we caught a secondary really nice trade right here, and a third one right here. So they were kind of like, I would say there were 4 really great trades in this particular strategy over the past month. You have this really nice trade here. This one wasn't too bad. The move from like right here to up here, and then you had this one, and then you had this one. So these were the 4 trades of the bunch that really saved us and made all of that profit. Something to keep in mind. Remember, we're looking for something that consistently does better than the asset that it's trading, right? We kind of want to see gradual gains higher, as opposed to choppy, it's working and then it's not working, and it's working and then it's not working, and it's working and it's not working. Something to think about. And this is just a nice way of visualizing it. Now we have the strategy. So this is the performance of the strategy. Again, we're looking at that 0 line, and we want to see where we are relative to it. So pretty much ever since from the start, when we got into this trade, we're trading below the 0 line. We were in a loss. We almost made some of that back, but it ended up being a losing trade. We almost came back up into 0 before it went negative on us further. And we continue to slide until we hit this banger trade right here, where, and this one and this one, these kind of 3 in tandem brought us back above even for this time period, for the month or so. And then we stay above even for the rest of the time, where the asset has still underperformed and is still below, still negative. We are positive and we're gaining. So at the end of the test, you can see where we're at versus where the strategy is. Our drawdown is essentially the amount that we, It shows how much we've given back, essentially, how much the strategy's given back. So had we no losers, right, that we've given back about 0.76%. So this value would be 0.76% higher, more like almost 5% gain instead of 4.25 or whatever it was. Right here, you've got your losers, you've got your winners. So 8 winners. 42% of our trades were winning trades. 58% of our trades were losing trades. That's not the greatest distribution of winners to losers. So luckily, we had some really big winners in there that helped offset the fact that our winning percentage really wasn't super high. It wasn't as high as we'd like it to be. And we're going to get into kind of some details around that too, because that's maybe one of the most important pieces that TrendSpider is now able to highlight for you that I think that I definitely neglected to consider, and I think that a lot of other traders might neglect to consider as well. And then at the bottom, we have just where each individual trade was taken, and not where each individual trade was taken, but the return from each individual trade. So we could see our max losing trade was for a loss of about -1.2. Our max winner was 5.10%. Our average gainer was 1.51. Our average return, that's average loss plus average gain, or that's all of your gains and losses divided by the total amount of trades. Average return 0.23, average loss -0.71. So it's just interesting to be able to see that distribution of data clearly. When this thing's a winner, it's a real big winner. Maybe we should be trying to control some of those drawdowns. Maybe we should add some criteria here. And we'll talk about this a little bit further with this next set of data. And this next set of data is tabular data. It's really just a breakdown of everything that we kind of just went over in the performance chart. So you've got your market. This is what you're trading, ES on the 5-minute. Data analyzed, this is how far back it's looking. So it's looking a month. Our net profit, 4.13%. That's the performance of the strategy. Our asset performance, that is the buy and hold, so 0.25. Beta versus asset, 1.05. Beta versus asset represents how close the value of the strategy is relative to the price. Does it move with price or does it not? And again, like I said, we're looking for something that doesn't really quite move with price. We want to see something that just continues to gain despite what price is doing. That's ultimately what we're after with a great strategy. We're looking for something that just kind of continuously manages to gain regardless of what the underlying is doing. Now we have positions. This is the number of positions that we've taken. And you'll notice in this particular case, this one is outlined, or not outlined, but it's shaded or highlighted in a red highlight. And this is a new feature that we've recently added to the platform called no-go shading. And it is a very subtle but very, very powerful feature that you need to understand if you're utilizing the strategy tester, because it's explaining to you why your strategy works or why it does not work. So let's keep this in the back of our mind. We have a no-go shading on our positions. So 19 positions, but there's a no-go shading. Why is that? We're about to find out. We have our win-loss rate, 42% win rate, 58% losing rate. So not so great, right? You really want to be at least 50 if you can. If you're not at 50, you have to do things to mitigate, or your strategy has to do things to mitigate the fact that you're not winning as much as you're losing. And those things that you can do to mitigate are going to be your max drawdown, your average win, your average loss, your average return, your risk-reward ratio, or reward to risk ratio. So max drawdown, exactly what we already talked about. Average win is exactly what we talked about before. Average loss, average return, these are all values we understand. Our reward to risk ratio here, 2.13. That means for every dollar you're risking, you're looking to get 2 for 1, right? Reward to risk ratio is relative to the trader. Some traders are looking 3 to 1. Some traders are looking 4 to 1. Some traders are looking 1.5 to 1. The lower your reward to risk ratio, the more you have to win, right? If you have a 3-to-1 reward to risk ratio, then as long as you're betting the same amount every time, or you're harnessing or leveraging the same amount every time, you can lose 2 trades for every 1 trade that you win, or 3 trades for every 1 trade that you win. And the numbers will still work out in your favor. And this is where no-go shading really kind of comes into play. We have a positive performance. Our performance beats the asset, but we still have some no-go shading on the positions. So why do we have no-go shading on the positions? It's because we only have 19 of them. Now, the strategy tester, the way that we've got it worked out is that you really need to take 50 trades to know if a strategy works. And that makes a lot of sense, right? It goes back to the idea of more data gives us a bigger scope of how, more data is going to encompass more market environments. If a market environment is up only, or if it's down only, markets just don't work like that. They're going to trend and they're going to go sideways, right? They're going to do both. They're going to trend up. They're going to trend down. They're going to consolidate or accumulate. And so the more positions that we've taken, the more the likelihood of the strategy is to work over a longer term. So essentially, because we've only taken 19 positions here, we're just simply saying, or the strategy tester is just simply saying, hey, look, there's just not enough data here for us to feel confident that this strategy is going to serve you well over a longer period of time than it has than this short period of time that we've tested. So it's kind of like a warning. Yes, your performance is good. Yes, it beats the asset quite well, but there's not enough positions here. You should keep that in mind. If you're planning on trading this strategy, you should keep it in mind. Now, outside of that, this strategy really does pretty decent. The reward risk ratio versus our win percentage, all of these values are aligned in such a way that you're not getting any other no-go indications. Let's try something different. I'm just picking a random thing here because I want to show you something that has a lot of no-go indications. Now we look at performance chart, because remember, like I said, performance chart is going to be the first value that you probably look at, because it's just the bare bones. Does it work relative to buy and hold? Well, in this particular case, it doesn't really work, right? We still have a 5.5% loss, but relative to the underlying, we're quite protected here. We've lost 5.5%. The underlying's lost 16.5%. So if you're using a strategy to kind of protect yourself, maybe you're not trying to get major gains from it, but you're trying to buck the overall trend of the underlying, well, you would say that this is successfully doing that, at least to some degree. You're managing downside, whereas if you were just buying and holding, you would be in a much worse state. Now, on the right-hand side, though, tabular data tells us, kind of confirms what we see a little bit, but also tells us a little bit more. Our win rate is very low. We've taken the required amount of positions, 131 here, so that's above 50, so we don't have a no-go highlighting there, but our win rate is 21%. Well, with a win rate of 21%, our risk reward is not high enough, right? Like, there are things about this that need to be true in order for this win rate to work. And when we hover over the win rate of 21%, it says with a risk reward ratio of 3.32, you need at least 28.1% win rate in order for this to be sustainable. And like I said, this is a brand new feature. This is not something that existed a week and a half ago, 2 weeks ago on TrendSpider. This is super new. And think about how helpful this is. Maybe in this particular case, you wouldn't be as excited about this strategy. It doesn't yield a positive gain. But what if it did? What if this was like 2% and you still had these values here? Well, we could see very clearly we need to get our risk reward up, right? So that means we need to either change things about the strategy, or we need to kind of try new strategies. We can also see our average return, negative 0.04 here. And then our expectancy. Expectancy is what we expect to make off of for every $100 spent. So a 0.8 value means, or a negative 0.8 value means we're expecting to lose $8 for every $100 that we risk. So negative expectancy plus a lower win rate plus reward to risk ratio, even though it's 3.3 to 1, that's actually a pretty decent reward to risk ratio. But because our win rate's really low, our expectancy is low, we're getting a lot of no-go highlights saying, hey, look, there are things about your strategy that are fundamentally unsound, and you should try some other things. So with all of that said, we understand now what these charts are telling us. We understand what this data is saying. And maybe most importantly, we understand what no-go is saying. And you can, like I say, you can hover over any of these no-go highlights and you can see what the platform is kicking back to you. Why is this no-go highlight here? And again, it's not always going to be, if you hover over the win rate, it's talking about risk reward. It's not talking about win rate, right? But they're interconnected. And that's the point, is that they're interconnected. All of these values influence each other. And now you're able to see that very, very easily and distinctly. So ultimately, end of the day, what you're looking for is a strategy that has no-go highlighting. You really want to avoid the no-go highlighting. At least that's what I'm always looking for. So I'm going to go back to my Rev Candle strat here, and I'm going to show you something. I'm going to show you ways that you can think about how to adjust your strategies. So on this particular strategy, remember, I'm going to run this again. We are testing the 5-minute time frame. We had RVol above 2, so above average volume, price below VWAP on a reversal candle, and then we're getting out. The only thing that's causing us to get out, or the only thing that's different about why we're getting out, is we're not defining where we are relative to VWAP. So it gets you thinking, well, what if VWAP weren't a condition here? What if we said we just want to buy reversal candles on the front and on the back? We're buying a bullish reversal candle on volume. We're selling a bearish reversal candle on volume. I'm going to remove that price relation to VWAP, and I'm going to run this strategy again and see what we get. So we get back a little bit different of a scenario. Now we've taken more positions. Our performance is not quite as good though, right? And I really encourage, play around with your ideas, kind of add things, take things away, play around with time frames. You might find something that works really well on particular time frames. We could see though on the Price Behavior Explorer, things are starting to get a little bit more interesting. Like, we're not so wishy-washy with the random control mean. If I open this back up, make it bigger, we actually are kind of outperforming that random control mean pretty much the whole time. We come down into it here and kind of lose all of the gains that we had. But ultimately we close above it, and we're kind of, it is still kind of trading with that random control mean, meaning that it's gaining when price is gaining, it's decreasing when price is decreasing. We can kind of see that. The only time it really bucks that is kind of in here where we gain against this loss. But in 34 positions, still below our 50 number, and our win rate, again, our win rate 44%. And why is there a highlight here? It's because our risk reward ratio isn't high enough. We need a higher risk reward ratio. If our win rate is going to be 44%, we need at least, what do we need here? We need at least 48.7% win rate with this risk reward ratio. So let's think of other ways that we can change this. Well, the first thing I think of is time frame. Maybe I want to give this a little bit more room to breathe. If I'm increasing the time frame, then obviously that relative volume, that RVol value, is going to be harder to achieve. Because we're looking at bigger time frames, which means bigger amounts of volume. So try the 15-minute time frame, and bam, we come up with something. Now this is an interesting looking return here, right? We have our performance chart. Now, again, 15-minute time frame, which means we're looking at a bigger data set. We're still using 10,000 candles, but they're 15-minute candles, 3x as many than the 5 minutes. So now we're looking at 4 months worth of data. It's a much longer time period. And we can see the performance of this strategy, 20.08% gain versus the asset over the same period of time. The asset has gained 1.96%. We're talking about a 10x the return on this strategy on ES versus buying and holding ES for that same 4-month period. That is not bad. 10x the underlying. Now on the right hand side, tabular data. 4 months worth of data, net profit, asset, beta versus asset. This is how closely, again, remember, how closely does the value of the strategy track? How does it move with the price of the underlying? Well, that value is much lower, meaning it's tracking a lot less. Like it's not tracking with price. And we can see that when we open up this chart. Again, our beta, or rather our random control mean down here in the red, this little dotted dashed line down here in the red. This is the asset over that period of time. The blue line, this is our strategy. Notice the strength in this strategy, higher highs, higher lows. This thing is bucking all the trends. It's gaining when the asset is gaining. It's gaining when the asset is losing. It's gaining when the asset's going sideways. Or it's at the very least, it's going sideways when the asset's going sideways. So this is a good looking chart. This is what we want to see out of the Price Behavior Explorer. We want to see our strategy really, really outperforming the underlying. And that's, again, we're seeing that here in the tabular data as well. We can see our win rate is 51%. That's a great win rate. Our position, 73. So we have above 50. That means we're in the green there. Max drawdown, negative 6.32. Average win, 1.04. Average loss, negative 0.54. Our reward risk ratio is kind of low, 1.91. But because of our average win rate and because of our total win rate, or our average win percentage and our total win rate, these values all align. And notice that we don't have any no-go highlighting here. This is a sound little strategy that has been working on ES. It's proven itself to be working on ES because of having taken 43 positions, or rather 73 positions over the past 4 months. It's a lot of positions to take. And we can kind of see them here on the chart. You know, we can zoom out and we can check them out. So really, guys, that is what we want to be, you know, getting to the meat of. This is why we're using the strategy tester. We want to build strategies that have this sort of look to it. If we got the red no-go highlighting on some of these tabular data values, that's meant to give us pause. We want to take a step back and we want to try and adjust our strategies to make those no-go values go away. Because again, there's a reason why they exist. And just because your performance happens to be decent, if a strategy is not sound, based off of the fundamental data that we're seeing from it, it's bound to turn on you. And just because it's worked over a certain period of time doesn't mean that it's going to work over the duration, over the longer term. So this strategy in particular has proven itself over the past 4 months. And it's a strategy that I would be willing to play around with and willing to kind of set into more of a dedicated, maybe like a trading bot sort of scenario. Just trade this for me every single time this happens, because everything is sound within it. Of course, that could change over time, but everything is sound within it, and I feel comfortable doing that. Now, as you guys probably know with the strategy tester, you can go and you can compare the strategy on different tickers. I'm just going to pop through NQ. Like on NQ, this exact same strategy performs terribly, performs really, really poorly relative to the asset. If we look at RTY, it does perform better than RTY, or it performs, I can't remember actually. Let me see. Yes, so it does outperform RTY, not quite as well, but it does outperform on RTY as well. So that's really interesting, you know? So that's it, man. That's my presentation for today. And I really hope that this was helpful for you guys. If anybody would like to screen grab this, use this for themselves, feel free. You're welcome to use it. Welcome to play around with it on your side. And again, like I said, if anybody has any questions, I'm more than happy to answer any questions for y'all. I wish the chat was working so that I could see your questions. For whatever reason, it's not. So if you have any questions, hit us up in the chat using that contact us button, or hit me up on Twitter with whatever questions you have. I'm happy to talk shop with you. Happy to, you know, if you've got if you've got strategies you want to take a look at, let's take a look at them. Happy to do it. So that's it for me today, guys. I really hope you enjoyed this. I hope this was helpful for you, and I just hope it was helpful. We are going to be back. We're going to be back on Wednesday. Jerome Powell is, he's hanging out with us on Wednesday. I believe that's going to be around 2 p.m. Eastern time. We'll probably be on a little bit earlier than that. We'll probably get on a little bit early and kind of do some little overviews, kind of see where we're at on the charts, kind of look at where we've been, look at where we might be going, and then we'll watch Jerome and the market volatility that comes because of whatever he happens to say. So please join me on Wednesday, and I'll tweet out when I'll be live. The TrendSpider account on Twitter will tweet out when I'll be live. And then also, like I said, if you're new to TrendSpider, thank you so much for being here. We're really happy to have you. If you are not yet a TrendSpider user, but you're thinking about becoming one, now's a great time. We do have a Halloween sale going on, I believe, for the rest of the day. It's a really killer deal. So take advantage of that. And yeah, that's it for me, guys. I hope you guys have an awesome rest of your day. Find some good strategies. Hit me up with your strategies. I want to see what you guys are finding. If you find anything great, let me know. If you find anything terrible, let me know. Love to see that too. Yeah, and we'll see you again. Hopefully, we'll see you again on Wednesday. Happy trading. Catch you next time. Have a good one. Take care. Happy Halloween. If you're going trick-or-treating tonight, be safe out there and have fun. And we'll see you next time. All right. Bye, guys.